Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 19th, 2025, and we're diving into the latest earnings report from GDS Holdings, a leading developer and operator of high-performance data centers in China. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. GDS Holdings has just released their third quarter 2025 results, and there's a lot to unpack, from revenue growth to strategic positioning in the AI sector.
Revenue and profitability overview. Let's start with the top line. GDS Holdings reported a net revenue of $405.6 million for the third quarter of 2025, marking a 10.2% increase year over year. John, what are the key drivers behind this growth?
The revenue growth is primarily driven by the continued ramp-up of their data centers. This has not only increased their capacity, but also improved their utilization rates. Additionally, the net income of $102.4 million compared to a net loss last year highlights a significant turnaround with a net income margin of 25.2%.
That's impressive. And how about their profitability metrics?
GDS's adjusted EBITDA increased by 11.4% year over year to $188.5 million, with an adjusted EBITDA margin of 46.5%. This improvement is largely due to operational efficiencies and a lower level of operating costs as a percentage of net revenue.
Operational efficiencies and future outlook. Operationally, GDS has shown some strong metrics. Can you elaborate on their data center utilization and future outlook?
Absolutely. The area utilized increased by 10.9% year over year to 486,607 square meters, with a utilization rate of 74.4%. The commitment rate for area in service is at 92.3%, indicating strong demand. Looking ahead, GDS is strategically positioned to capture the accelerating demand from AI, which they see as a significant long-term growth catalyst.
That's promising. How does this position them in the market?
With their strategic execution and focus on AI, GDS is well-positioned to leverage the growing demand for high-performance data centers, which should drive sustainable, long-term value for stakeholders.
EPS forecast and analyst expectations. Now let's discuss the earnings per share. Analysts were forecasting an EPS of -6 cents, but GDS reported an actual EPS of 0.6 cents. What does this mean for investors?
This is a significant beat on expectations. The positive EPS of 0.6 cents compared to the forecasted loss reflects the company's strong financial performance and effective cost management. It also indicates that GDS is exceeding market expectations, which is a positive signal for investors.
How might this impact investor sentiment?
Such a beat on EPS can boost investor confidence, potentially leading to positive market reactions and increased interest in the stock.
CEO and CFO statements. Let's touch on the statements from GDS's leadership. What insights did the CEO and CFO provide?
CEO Huang highlighted the solid financial and operational performance, attributing it to disciplined strategic execution. He emphasized the company's strategic positioning to capture AI demand as a long-term growth catalyst. CFO Newman spoke about enhanced financial flexibility, which supports their next phase of growth and commitment to delivering sustainable value.
It sounds like the leadership is confident in their strategy and future prospects.
Indeed, their focus on strategic execution and financial flexibility positions them well for future growth, especially with the rising demand for AI-driven data solutions.
Key takeaways. In summary, GDS Holdings has delivered a strong third quarter with impressive revenue growth and profitability. Their strategic focus on AI and operational efficiencies has positioned them well for future growth. John, any final thoughts?
GDS's performance this quarter is a testament to their strategic execution and market positioning. The significant EPS beat and strong financial metrics make them an attractive prospect for investors looking for growth in the data center sector.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on GDS Holdings' performance in the comments below.